Hare Krishna. Welcome to Tax YouTube channel. This is CRO Pingai, practicing chartered accountant based in Mumbai. Also partner in Motilal and Associates LLP, member firm of Marks Network. Welcome to the video series What Law Says. And under that, today we are going to discuss two important case laws under GST law. So let's dive into it. Let me allow to share my screen. Yes. So in-depth analysis of two case laws under GST law. So today's first case law, where Kerala High Court ruling reinforces the legal protection for bona fide purchasers who have taken input tax credit in good faith and paid tax at source, especially where supplier defaults occur without collusion or failure to rectify after notice. So let's see case citation. Parties were K.V. Joshi and C.K. Paul versus Assistant Commissioner of Central and Central Excise Chalkodi, and date of order is 27th October 2025. Let's understand facts of the case. Petitioner were registered GST taxpayers who purchased goods in financial year 1920 from registered suppliers. They paid full GST to the suppliers and claimed ITC in their returns with valid tax invoices and e-way bills. The suppliers, however, failed to deposit the tax to the government and didn't reflect the suppliers in their own GST returns. Tax authority issued show cause notice under section 73 of CGST Act 2017 seeking what? Reversal of ITC tax and also levied penalty. So petitioner challenged the show cause notice before the Kerala High Court. Let's see what was issue under consideration. So whether a bona fide purchaser who has claimed ITC based on valid documents and paid tax to the supplier can be held liable for reversal of ITC and penalties where suppliers failed to deposit tax in absence of what? Collusion or failure to rectify the discrepancies. Let's see what was the relevant legal provisions. Section 16, that is conditions for availing ITC. Section 42, that is matching concept of ITC. Section 73, determination of tax not paid or short paid or ITC wrongly availed without fraud, and principles of bona fide claim of ITC under GST jurisprudence. So let's see what were the contentions of the assessment. SSC contended that the ITC was legitimately availed with proper tax invoices and e-way bills on record. Full tax was paid to the supplier who were responsible to deposit the same. Who is responsible? The supplier. No collusion with suppliers nor any notice to rectify the returns. So liability of suppliers cannot be shifted to the purchaser is what main point here. So, what were the contentions of the revenue? Revenue contended that since suppliers didn't pay tax and didn't reflect supplies in returns, ITC claim was irregular, is what contended by the department. Proceedings initiated under Section 73 for recovery of tax as well as penalty. So, let's see what High Court observed and held. The show cause notice issued to the petitioner under Section 73 was unsustainable and illegal is what High Court observed and held. Petitioner had availed ITC in good faith. Petitioner had availed ITC in good faith, made full tax payment to the supplier and possessed proper invoices and e-way bills with him. So the court clarified that proceedings against purchasers can only be initiated after issuance of notice to defaulting suppliers, and if they fail to rectify their discrepancies or in case of proven collusion None exist here. What code clarified that the proceedings against the purchaser can only be initiated after issuance of notice to the defaulting supplier, and if they fail to rectify the discrepancies or in case of proven collusion, none exist here. It's nothing is exist in the given case. So hence the show cause notice was quashed. So, what principles laid down this case? The beneficial rule of law. The purchaser in GST cannot be penalized for supplier's GST default when ITC claimed in good faith with proper documentation as well. So, liability can only be fastened on the purchaser after statutory mandated steps, notice to the supplier, chance to rectify, and presence of collusion is important. So reinforces what protection against the reverse burden on innocent purchasers. So conclusion of case one is this decision is a landmark protective ruling for taxpayers who properly fulfill GST compliance. It underscores that ITC legitimately taken and tax paid at source cannot be reversed due to suppliers' lapses unless clearly established statutory conditions are satisfied. Very, very much clear. Okay. Very interesting. So now moving further to the case two for today. Here, Karnataka High Court addressed whether bona fide clerical errors in outward supply, that is GSTR-1, data can be corrected in GST returns after statutory period, particularly where such errors impact what recipient's ITC eligibility and where no revenue loss arises. Very important. Let's see case citation. Parties HR Carriers versus State of Karnataka and date of order 4th November 2025. Very latest. Both of case are October and November. Let's understand facts of the case. Petitioner is a registered GST taxpayer who filed GSTR-1 returns for June 2022 to September 2022. Due to an inadvertent clerical error, the GSTN for certain outward supplies was uploaded incorrectly, leading to mismatches and denial of ITC claim by the recipients. So we have to put A, we have put a GSTN of B like that. Petitioners sought permission from authorities to rectify the R1 details so recipients can avail the correct ITC. Authorities declined the request, leading to the writ petition under Article 226 and 227 of the Constitution. Let's see what was the issue under consideration. Whether a registered taxpayer can be permitted to rectify inadvertent errors in GSTR-1, that is outward supply return, beyond the statutory cutoff date under section 37 and 39 of the CGST Act when there is no loss of revenue and the error affects ITC to the recipient. Very important. There should not be a loss to the revenue and the error affects what? ITC to the recipient. So, relevant legal provisions were Section 37, furnishing details of outward supplies and rectification provision. Section 39, filing of returns and timeliness. Statutory provisos specifying the cutoff for rectification, that is post 30th September following end of financial year. Let's see what were the contentions of the assessee. Assessee contended that error was bona fide and inadvertent, no loss of revenue at all. Correction enables rightful ITC to the recipients. Dependency on principles of justice where technicalities should not override the substantive rights. Very important to note this point or line. Dependency on principles of justice where technicalities should not override the substantive right. Cited precedents include Sunday versus Assistant Commissioner and similar High Court decisions advocating the relief for genuine errors. Contentions of the revenue. Rectification beyond statutory deadline not permitted and strict adherence to the timelines required is what revenue contended. So let's see what High Court observed and held. Acknowledge statutory framework allowing rectification of errors under section 37 subsection 3 subject to certain timeliness. court took a note of comparable judicial authority allowing the corrections where there is no revenue loss and error is an inadvertent. So held that in similar circumstances, authorities should permit rectification to reflect the correct outward supplies, and accordingly, the writ petition was allowed, permitting the rectification of GSTR-1 for the relevant period. What is important is that should not be lost to the revenue and the error should be inadvertent. So principles laid down here, GST law should be interpreted in a manner that prevents unjust denial of credit when the error is clerical and bona fide. Departmental timeliness cannot be mechanically enforced on the assessee to defeat the or on the taxpayer to defeat the legitimate rights where no revenue prejudice arises. Emphasis on a taxpayer-friendly approach where statutory machinery is available for rectification. Means whenever this is available, then department should emphasis on a taxpayer-friendly approach to the taxpayer. So, conclusion to the case 2. This judgment offers what much needed clarity on rectification of GST returns and ITC implications. It facilitates fairness for taxpayers burdened by human errors and helps avoid undue litigation when revenue neutrality is evident. So that is what important. So I think today's both cases are very important to note. So that's it for today. Thank you. Thank you so much for patient hearing. If you are not yet subscribed Tax YouTube channel, then do subscribe it for latest updates and video series like this. If you have any questions, observations, suggestions, then do let me know via WhatsApp, via email, and also you can comment below the video. So stay tuned to the Tax Guru YouTube channel. Thank you. Thank you so much once again. Bye bye. Take care. See you soon. Hare Krishna.